Okay. So I hope you don't find this too dry, but yeah, as I said, I want to start by going over some theory so that you have a really good understanding of why I think scale is so important. And it all comes down to what's called long memory and order flow. Long memory and order flow, by which I mean flow, basically. Buy orders following buy orders and sell orders following sell orders. And there are two main schools of thought on why the markets demonstrate long memory and order flow. The first is that traders display what's called herding behavior, like these sheep, either because they all respond similarly to common information, and that's a process which happens over a period of time, either because different traders have different response times, or because information is distributed asymmetrically. So because not everyone gets information at the same time, or because traders observe the behavior of other traders and change their strategy accordingly. So, in this sense, they're responding to private information that other traders have indirectly. Okay, so the idea here is that information is conveyed in price action, and so traders will monitor each other's actions through technical analysis, what we're doing here, of volume and price action, and will update their strategies to imitate those of others. So effectively buying when others buy and selling when others sell. And so if herding is the mechanism or part of the mechanism which explains long memory and order flow, then it makes sense that the higher time frame levels or structures are more significant, or will be more significant, as they're simply more visible to more people. Okay, daily level is clearly more apparent than one derived from the M1 chart, and so the idea is that more people are reacting or trading in response to that level. However, from the literature and from what I understand, it seems quite likely that herding, this explanation only has a small part to play in the long memory of order flow. The second, and I think the best explanation, is down to something referred to as order splitting. So some of you might have heard of this or be aware of this, but this is the idea. Most markets are, in fact, highly illiquid, especially these altcoins some of you trade. So if an institution or very large trader has a big order to fill, they're basically forced to split their order up into smaller chunks. Okay, so I couldn't just market buy $100 million worth of Bitcoin all at once on BitMEX without getting a really shitty entry, as a result of the fact that an order that size would have a significant impact on price. I'd get slipped. I also can't stick a limit order in the book, because that would reveal valuable information, i.e., the presence of demand. Okay, and so the assumption here is also that larger traders are on average more kind of informed, and so my order would probably get front run, again pushing price up and either resulting in an incomplete fill or giving me a shitty entry. And of course that's not what you want. So large traders and institutions have to kind of filter money in and out of the market in small chunks, basically kind of spreading the execution of their orders out over long periods of time. If you want to read up on this, then the most kind of comprehensive paper and most easily digestible paper is this one here: How Markets Slowly Digest Changes in Supply and Demand. And you can find a copy of that on my website. But the point is that Yeah, large trades have to be split up or fragmented. So a large or quote unquote informed trader needs time to build a position. They have to scale in and out by necessity. And so they trade incrementally. Does that make sense? Because the outstanding liquidity in any given market is usually relatively low, it's latent. Trading for big players is inherently an incremental process. And as a result, and this is really important, large traders or institutions tend to trade in the direction of long-term fundamentals. And that's really the reason why you could think of the higher time frames as being kind of quote unquote controlled or shaped by participants with a long-term outlook on the market. It's because these participants are the main source of large latent supply and demand and play a really big part in the long memory of order flow.